Hello again, Carlos Scarpero here, VA Mortgage Specialist with Ross Mortgage and Military Mortgage Bootcamp. Today I want to talk a little bit about the VA funding fee and the Certificate of Eligibility. These are two important concepts you need to understand when applying for a VA loan, and then go through it step by step. I got a couple slides, so give me a quick second while I switch over to explain this in a little more detail. So the Certificate of Eligibility is the first thing we're going over. That is your golden ticket to getting a VA loan. If you do not have this form, you're not going to get a VA loan. No ifs, ands, or buts. Now this just shows you're eligible to get it. It does not mean you qualify for the loan. It just means that you have met the military's guidelines to get a VA loan. If you have served after 1990, you need 2 years of service or active duty at least 3 months. And if your reserves is a little bit longer at 6 years of service, unless you've been called up on Title 10, in which case that does get shortened for a bit. So what happens is we'll need to either get your DD-214 or statement of service, and we will order a Certificate of Eligibility, or you can order it yourself. But it's easier just to ask us to order it. So once we pull credit, we'll have your Social Security number to get the credit report, and typically, at least where I work, we'll order the Certificate of Eligibility right away. It's one of the very first things we order. Unfortunately, a lot of lenders aren't quite as good at getting them as quickly as we are, so keep that in mind. And so I always recommend that you work with someone that knows what the heck they're doing and is very good at pulling the COEs to make sure that you are qualified, or are eligible, I should say, to get the loan. So let's get through this COE real quickly. So first you get a reference number, doesn't mean anything. Normally there would be the name of the veteran on this form, because it's more for compliant for security. It's not on here. Entitlement code 10, that just means they served after 1990. For each wartime period, there's actually a different entitlement code from World War II all the way to current. Branch service versus the Marine Corps funding fee exempt, and that's important. We'll go through exempt and non-exempt in a minute. So prior loans, so this person has an active loan for 104-193. And means $36,000 entitlement has been charged. It doesn't mean they can't get a VA loan. It just means that in certain cases they might need to put a down payment down. And so this person is exempt because of the very bottom of the form. It says funding fee. Veteran is exempt from funding fee due to receipt of a service-connected disability compensation 1,019 monthly. It's right there at the bottom of the form. So we know that the person has a service-connected disability, and we know they're getting 1,019 a month. This actually would count also as proof of income, which is good to know, because some people will try to get way too into it to try to find other ways to prove the income. That's all you need. You need this form and something showing it's going to their checking account or savings account or whatever account it's going into for that COE. So next, let's talk about the funding fee. So that on that first example, it's exempt, if you remember, which means that person doesn't pay any funding fee at all. Pretty cool. So let's talk a little bit what the funding fee actually is first. So the funding fee is mortgage insurance for VA loans. If you ever taken out an FHA loan or taken out a conventional loan, on a conventional loan, you have to get what's called mortgage insurance, or MI. For a FHA loan, you have to get MIP insurance on every FHA loan. So with the VA loan, it's a little bit different. It's called a funding fee, and it's a one-time fee to ensure that the lender gets paid in case of foreclosure goes forward. And that's only if you're non-exempt. So if you have a service-connected disability that's completely waived, which makes the VA loan an even better deal. It's already a good deal to start with, but it makes it an even better deal. So how does this work if you're non-exempt? Well, we look at the type of loan, and we also look at the down payment amounts. So on purchase, and these are the 2020 charts. If you see some with lower numbers, it means a prior year chart, it's out of date. So this is the 2020 charts. So purchase loans, if there's no down payment and you're not exempt, first time you use 2.3% one-time payment of the funding fee, and that's typically financed into the loan. So if it's a zero down loan, you're actually borrowing 102.3, so you're borrowing a little bit over the purchase price on that. You can pay it separately, but 99% of the time people finance it in the loan. So keep that in mind. Subsequent use. So if you're buying a second time, that would be 3.6% for subsequent use with no down payment. If you put some money down, 5% or greater, and less than 10%, it goes down to 1.65. And notice that for the subsequent use, it's actually the same percentage on both. 10% or greater, 1.4%, first time and subsequent use. And so what's the reason for that? It's because when you're buying your second or third or fourth home using VA financing, they figure, well, on that house you're selling, you're going to have some money to put down because you're probably going to pull some equity out of that house you just sold. So for that subsequent use, they're trying to penalize a little bit for that zero down. They're really trying to encourage veterans to actually put money down their second, third, and fourth purchase of a home. Cash out refinance, 2.3% first time use, which is very few. It's first time, but every so often it does happen. Maybe someone got an FHA loan initially for whatever reason and decided to roll that into a VA, then it would be at 2.3. Subsequent use, which is most cash out refinance, would be 3.6. EARL, that's the streamlined refinance, 0.5% on the VA streamlined refi. Again, that's only for non-exempt. Loan assumptions, we don't see many of these, but 0.5 on those as well. In case you didn't know, VA loans are assumable. The person assuming it doesn't necessarily have to be a veteran, but it's highly encouraged that the person assuming it also is a veteran or can tie up the entitlement of the veteran on the initial loan. So keep that in mind as well. So that is the COE. That is the VA funding fee. I hope that clears it up a little bit. As always, if you have any questions, feel free to give me a call. My number is 937-572-3713, or you can also reach me online at scarpero.com. I am licensed in Ohio, Kentucky, and Michigan. If you're in any of those areas, I'd love to talk to you. If you're outside those areas, I am connected with loan officers all around the country that can help. So let's talk. Thanks.